Welcome back to Primary Source China Investment. This week, we're on show W2, perhaps just in time for tax season. So this week, we're going to talk Russia, Ukraine, and China. We're going to intersperse that with some trade, some history, and some investment realities. And jumping right into it this week, what is the immediate effect on China from Russia's incursion, invasion, issue into Ukraine? The first is oil prices. Oil prices have spiked. So call it $100 a barrel, 60 a barrel last year. That's 400 million US dollar a day. China is the world's largest importer of oil. So that means every day China is spending $400 million more on oil in the spot market. And because they import about 100 million barrels a day. You may have missed the announcement during the Olympics that China and Russia signed a long-term gas and oil agreement. So without being too dramatic here, trade alliances are being, if not strengthened, realigned. Ukraine, also China's biggest trade partner. Remember, 2 weeks ago, we said China is the world's largest trade partner, and that doesn't change. It's just some of the dynamics around that is going to change. And remember, China can't power itself and can't feed itself. So Russia is a likely partner to step in for those power needs, gas and oil, and also for those agricultural needs like wheat. But that may be the short-term solution. China bending towards Russia is going to certainly carry risks, but also some potential upsides. We can think about gas and oil contracts in rubles or renminbi versus US dollar. Right now, China is walking a very delicate line, saying both that sovereignty is sacrosanct and Wang Yi calling for diplomacy. Friday, Xi Jinping had a conversation with Putin, seemed to agree with Putin in general, but also forbid the Chinese banks from transacting in Russian commodities in US dollar. Also, the Ministry of Finance just Saturday put out a 5-point position on the Ukraine issue, simultaneously calling for the respect of sovereignty, dialogue, and somehow still blaming NATO. So that's a lot to unpack, and we're going to get to the investment side of this and what's been happening in real time. But Peng, we'll open it up to you, and you can take it from any perspective here, but there's a lot to unpack.
Sure.
I want to get your perspective.
I think firstly, that's not of the news on the internet.
Yeah.
Fake news, true news, comments, individual, government, it's so crowded. So I think the best way is just wait it. So you even don't know what's going on right now. And also the financial market, you probably can see it. As long as the war started, financial market bounced back. Seems like it's just waiting for the open file. And immediately, the China market probably bounced back at 3 to 4%, and the S&P 500 bounced back probably 5%. That's a huge volatility. And same things, you can see the gold. All looks like a crash, and oil do the same thing. So it's really hard to predict it. So I think there's no way to do anything right now. Best way just still wait for that. Oil obviously is China. That's a major concern.
Yeah.
I think China's strategy is pretty clear, pretty consistent, just to ensure the energy security. So they really try to diversify, get the oil from the western side and import it from the Middle East area. Coal is the major fuel in China right now. That is why they highly promote like the clean energy, alternative energy in China right now.
You brought up the commodities. Commodities have been ripping. Year to date, I'm going to put up the Zhengzhou Commodity Tradable Index. I mean, that's been up year to date. The other thing that's been up year to date is the CSI Energy Index. If you look at the names in those, and we're going to put those up, that's been up year to date, whereas the CSI 300 has been down year to date as well. So there are areas of the market and there are other asset classes that have been performing. It's no surprise that energy is performing. I don't think anybody would be surprised about that.
Yeah, from the China government perspective, they really try to manage the commodity price, not as soon as the commodity price soared and the entire country's inflation gets soared. Right now, it's already getting worse. Right now, I see a lot of the policy analysis. The main theme is China really focus on solve the internal problem. Most of the time we talk about the evergrade, and we talk about the unemployment. That's kind of things. And recently, China really focus on the agriculture. So they try to produce enough food and the soybeans. Those looks like two big problems right now. I don't think China have too much energy is work on outside the problem. So they already get enough for the internal issues.
Yeah, I absolutely agree with that. Unfortunately, I have to interject that, China, again, this is maybe a lot of people online, China wants to, return to its rightful place of leadership on a global scale. And in order to do that, they need to take some positions and they need to show some leadership. And I think their abstaining vote at the UN Council was actually not a sign of strength at all. I think it was a sign of weakness. You either say, you agree with what Putin's doing, or you say you disagree with what Putin's doing. Going forward, if China does want that bigger leadership, they're going to have to look to some history, because cozying up to Russia does have some downside, right? If we look in their northeast, they're going to look towards what is now Vladivostok, or its Chinese name is Haishenwan. This was an issue that just blew up in the summer of 2021. So, those kind of issues, whereas you have border issues, are not new. They're going to continue to come up. And as soon as Russia comes knocking on China's door, based on the 1858 or 1860 treaties that were signed, there's going to be another problem. I mean, back in the summer of 2020, there was this problem with India, where there was hand-to-hand combat in the Galwan River Valley. So
I think, that's
these keep coming up. It's not like it's going to go away.
I think, firstly, so the really high level, the war is the extension of the political fight. And as to the individual level, war is hell. So I'm very sorry for all the people suffer the war. Obviously in China, the main voice is really don't want the war. Try to stay the peace. Everything we can talk. Unfortunately, the political fight is never stopped. So probably we can see that right now, each party, so they have their own opinion, standard, and explain why they're doing those kind of things. So we all know that, and we know the reason. I think that the rest of the things is still definitely there's not the two party, not the Russian, not the Ukraine. I think probably entire the world get to participate. So this is still the consequence of the political fight in many years. I think right now is firstly each party really try to solve the problem, or really try to continue to fight. So that depends on their goal. So different goal, they have the different actions. And also, they also have a lot of the constraint, pretty much like the investment world. What do you really want? Every day people buy the stock, sell the stock. You will see they all want to make the money, but someone buys, someone sells. I hope they can make some promise and reach agreement. Everybody can accept it with that.
Once you cross the line and go to war, you've basically lost your ability for diplomacy. Now diplomacy has to wait.
And it looks like a Russian, obviously, they don't want to, they think they already get lost. So they decided to cross the line. So this is really, nobody can stop that. I think right now, hopefully, you will see the market get a bounce back. Looks like they're probably starting getting the peace talk in Minsk or whatever place. So hopefully they can make some agreement, just minimize the loss for each participant.
Yeah, and I think if we focus on going back to the investment place where we have expertise, and again, peng.guo and I don't have any expertise in this. We're just trying to look through what's happening and go to the investment space, which is why we look at energy. And again, energy has gotten a bid. Doesn't look like that's going to go away. The cost of input is going to be higher, but we know what happens on the mainland when costs go higher. there is some way for government to step in to moderate price, like you mentioned on commodities. So I don't think that the energy trade is gone. I don't think that the commodity trade is gone. What's your thoughts, Peng.Guo? Or is there
I think right now is probably the most difficult period for the energy investment, because the price already gets so reached to the high level.
Yeah.
And in the high level, they get huge volatility.
Yeah.
And if tomorrow those two countries get talk and reach some agreement, everything bounce back. Otherwise, everything get dropped again. So that's no way to predict those kind of things. Basically, if we follow the traditional risk parity, probably just minimize the positions and still watch for that. And also commodity price, it depends on how the Fed control the inflation. If they interest rate and I think the second quarter expectation, the Fed will raise the interest rate.
Yeah.
That's with a huge impact for the entire market and also currency rate. I think really investment get exhausted right now. So many things.
Yeah, there's a lot of
term.
Yeah, a lot of uncertainty. A lot of uncertainty. So I think the takeaway from that is just be a little patient, right? There's no need to put new money to work or new things to work, but be a little bit patient.
Yeah, we have to wait if market get to stay calm.
Well, we're going to leave it there for show W2. Make sure you get your taxes done. It's a reminder, and we really appreciate you tuning in. We'll see you next week.
Thank you.